machine, now with an integrated milk solution, allowing you to prepare your favorite coffee recipes at the touch of a button. U-Milk, Nespresso, what else?
This week on Sports Night, we're marking the 6-month countdown to the Olympic Winter Games in Russia. Here in Threadboat, catching up with some of our Olympic hopefuls. How do they plan on qualifying for Sochi 2014? That's Sports Night this week on Sky News.
This is Switzer, still plenty more to come on the program. Here's a quick check of the market today. The S&P ASX 200 rose 1%, boosted by better than expected earnings and gains in the big banks. Go to the banks. The government's decision to tamper with FBT for car leasing raises lots of questions about our tax system. So, to demystify the issues around FBT and other tax troubles, we have Kassam, the director of CharterNet. How are you, Samir?
Well, thank you, Peter. Thanks for having me.
CharterNet. What is it?
Big Four couple of guys coming out into the market to start their own practice in accounting, tax, advisory and government grant sort of work. But sort of really trying to bring that Big Four expertise down to the SME market.
And is it an online only business or is it face to face?
Absolutely not. No. So we're based in the city, in Sydney CBD, and we also have an office out in Norwest Business Park. So sort of trying to cover as much of Sydney as possible. Just got to tackle the south at some stage.
And if I remember right, your father was surprised you were invited on this show.
Yeah, he was.
Was he surprised to get invited back?
I think he was jealous.
Good on him. All right. So let's. I've noticed that even some government and politicians don't fully understand what's going on with the FBT. So explain to us what the government has decided to do.
Okay, I think the way you summed it up to begin with, calling it a kerfuffle, was pretty spot on. I mean, FBT for cars, historically there's been three ways you could go about it in terms of calculating it. The operating cost method, which is the one that they're proposing remains, and that's very much you take a logbook for 12 weeks, you compare your private kilometres to your business kilometres, and that gets applied across the board.
So if you're a 60% business, 60% of your tax, of the amount you pay becomes a tax deduction.
Exactly right.
Okay.
Applied to fuel, depreciation, all those sorts of things.
And if it's all business, 100%. Okay.
So quite administrative, a little bit of work around it. And that's why, interestingly, the Labor government and the coalition ages ago introduced the statutory method to make life a little bit easier.
So tell us what the statutory method is.
So the statutory method is a baseline amount that's just applied to the cost of the car. So there used to be a staggered sort of system. It went from 15 to 20 to 26%. In May 2011, it was just eradicated and just brought down to 20%.
So if my car for simplicity was $100,000, 20% of it, $20,000 would be a tax deduction.
Correct. So
regardless,
regardless of your business versus personal use. So you could actually not use it for business purposes at all. Salary package your car and get.
So the government accepted perk. But I guess they presumed it helped the car industry. It probably even made nurses and doctors their wage was effectively a little bit better, like a wage sweetener.
Well, that's exactly right. And it's charity workers, government workers that get the full benefit of the FBT regime more than anyone else.
But it's been costing government about $1.8 billion over 2 years.
Exactly. No, it's actually $1.8 billion annually. They're seeing that as a saving, and I think they're looking to somewhat make up a bit of the slack from the carbon tax being replaced by ETS.
Good point.
And it goes from there.
Okay. Now, let's just sort of explain to people then. The FBT hasn't changed. So explain what FBT is for people who don't understand what fringe benefit tax is.
A good way to look at FBT would be it's non-cash. It's sort of non-cash benefits provided to employees in respect of their employment. So it can be anything from loans to gifts, expenses, entertainment, cars in this circumstance. So it's everything that's non-cash.
Okay. So this is our example of the $100,000 car, and 20% of it was for business. So 80% effectively is private.
Correct. So under the statutory method, if you were to go operating cost versus statutory method in that circumstance, you'd probably end up with a relatively similar result. However, if, for example, where you've bought a $100,000 car
and
you don't use it for business whatsoever, you pay the payments actually are salary package, so it comes out of your pre-tax income, and the fringe benefits tax payable by the employer comes out of your post-tax, and you end up with. And I think the average benefit is calculated to be. It turns out to be around $5,000 to $10,000 per person. So it can be significant.
Who really is paying the FBT? Because the boss effectively is responsible for paying it. But does the employee and the boss share the FBT, or is all the employee?
Well, the way it's designed these days is so that the boss is actually not worse off at all.
No,
and so
that's why he says, yeah, I'll do novated lease, no problems.
Happy to do it because what happens is the actual FBT tax amount just comes out of the employee's post-tax pay. And the payments for the novated lease come out of their pre-tax. It's really a win-win for the boss and the employee. But look, that's what the government's really looking to eradicate.
Okay, and so by eradicating the statutory method, some people will, and I do, I know a lot of small business people who use a statutory method because they just don't want to do the 12 weeks of the operating method. Exactly. And they could be 50-50. They could actually be claiming more using the operating method.
So for high-frequency sort of business drivers, so if you're doing a large number of kilometres, and that is primarily what your job is all about, then the operating cost is actually probably the better method for you. Interestingly, people that should be using operating costs generally are, because they know that. The problem is very much going to be for, I mean, I think ASPIO estimate that 500,000 novated leases out there at the moment are using the statutory method, and only 10 to 15% of those would actually remain to get a benefit under the operating cost method. So that other 85–90% of people, it's money out of their back pocket that was previously a tax benefit and just not going to be available anymore.
Okay, now I wanted to also talk to you about comparing whether someone in a small business should operate as a company or as a sole trader. We are running out of time, but next time we get back we will talk about it. But just in a nutshell, what are the big pluses of operating as a company, provided you pass all the little rules? I think the three major pluses are, one, limited liability. So if you're operating as a sole trader and something goes wrong, you're personally up for it. You get sued personally, the house could go, the car could go, everything can go but the family dog. Right. The second thing is primarily the 30% tax rate within the company. So you pay 30% tax within the company. Rather than paying your top marginal tax rate, which a lot of small businesses are on. Exactly right. So you can retain that cash within the company for future investment, or even better, to grow the business and then sell it on capital account and get great tax benefits through that. So that's two. That's two. The third major one is, I think, administratively actually operating through a company works a lot better in that you're generally running everything through a company bank account. You can keep the admin, the receipts, the accounting, and you actually end up picking up a lot more deductions. So when we see someone operating as a sole trader compared to someone operating as a company, it's very, very tough. They marry in personal life and business life. Exactly. They think that revenue is actually profit and all those mistakes, aren't they? Exactly. The flip side is that you do have to, you're an employer to your own company, therefore you have to pay them 9.25% super, which is a cash flow problem. That's a good personal investment issue. It's a good thing. It's a good thing. You're building a nest egg for the future, so I think it's a good thing. I think that 0.25% additional super is one of the best things that's happened in the past 12 months. All right, mate. Great to see you on the program. We'll get you back and talk about these sorts of issues. Fantastic. Fantastic, mate. With the Australian dollar falling, will this mean a significant boost to tourism? One hotel chain in Australia, the Langham Hospitality Group, would have a few views on the positives that could lie ahead for the sector. And for more, I'm joined by the CEO, Brett Butcher, in Melbourne. How are you, Brett?
Hi Peter, how are you?
Great to see you, mate.
Thank you.
Now,
pleasure to be here.
I know I didn't brief you about, let's talk about the lower AUD dollar, but as a guy like you, you earn some money in Australia nowadays with your Langham Hospitality Group. The low dollar, is it good for you?
Oh, it's great for us in Australia, in our hotel business, and in general for the entire tourism business in Australia. You know, Peter, I don't know whether you're aware, but domestic tourism for the last decade in Australia has gone backwards. It's been in recession for a decade, domestic tourism. What's caused that? You know, maybe some of, obviously, the global financial crisis has caused that, but a lot of that has been Australians taking their holidays offshore because it's been cheaper now. Strength of the Australian dollar, taking that offshore, they can stay and go there. So I think there's a sort of a double-barrel thing happening here. As the Aussie dollar drops, we're going to probably get a little bit of an uptick in domestic tourism, which helps the entire tourism business. And then obviously also it makes our product cheaper on the international stage, so it should attract more Chinese, more Americans to our hotels and to Australia.
Now, I remember talking to a general manager of a major Sydney hotel who actually said 50% of his business was actually domestic stuff, interstate stuff. Is that a pretty common characteristic